Hi. As part of McCarthy Group's ongoing investor education series, we're going to talk today about the investment clock. And in particular, we're going to be focusing on what happens when the market moves into a slump. Now, there's a lot of opportunities when the slump happens, and here to help me discuss this issue is Klaus Wild, our resident builder. Hi, Klaus.
Hi, Stephen. Thanks for the invitation.
You're welcome. Now, Klaus, in the beginning of a slump, we start to see building supply companies, the steel, the windows, the you name it. Right? What are you seeing when we've moved through that slowdown period, and now things are starting to get a little bit tight? So, what are you seeing with those material prices?
Well, I love this period because
I bet you do.
Materials start dropping in price. Tradespeople, their prices also drop down.
Why do they do that? Why do tradespeople?
Because the work, there's not as much work around, so it's supply and demand. So obviously there's less demand, so the tradespeople all of a sudden their prices are dropping because there's a lot more competition in the marketplace.
Yeah.
So they start dropping their prices to compete, and that's also happening with all the suppliers.
Mm-hmm. So we've got a combination. We have tradespeople dropping the early rate, and we have their building material prices also falling. Right?
That's correct.
That's a good combination.
Yeah.
Now, what do you normally find the market's doing at that point? When I say the market, the volume, the sales, are people rushing in to take advantage of that?
No, it's definitely decreased a lot. It's
Right.
decreased.
But isn't that the best time to be buying, when prices are falling?
Oh, absolutely. That's what all of a sudden. That's where the astute investor is. All of a sudden, they're up again. They're looking around. Property developers are out looking at what land they can buy for the next property rise.
Yeah.
And it really becomes a buyer's market again.
Okay, but the market is somewhat negative at that point, isn't it? There's more sellers than buyers. Some investors that had bought properties at the peak of the boom see prices because of what it costs to build a new home can even be cheaper from what they had previously paid.
That's correct.
So some investors lose heart and they sell their investments, and setting it up for the next investor to come along to profit from that.
Exactly.
Yeah.
Instead, they should be probably hanging on to that property and waiting for the whole cycle to go again.
Yeah. So if we look between the beginning of the slowdown period to the beginning of the slump, we're probably looking at around 2 or so years in each one of those segments, 2 to 3 years perhaps in each one of those segments.
Yeah, look, I haven't got a crystal ball, but that appears to be the time frame. But I suppose they say these days a cycle happens between 7 to 10 years, don't they?
Yeah, and maybe 2 to 3 years in each particular quadrant.
Exactly.
Okay, well look, that sort of wraps up the what's happening in the slump period. And just to summarise, slumps can actually be the best time to be buying. It's simply because you've got prices actually declining, and in fact they're probably going to be the cheapest they're ever going to be. Now, if you'd like to know more information about what's happening in the property clock, we've produced a free guide on reading the property clock and how to profit from that. You'll see there at the bottom of our screen is a link to our website to get a hold of your guide. So please be my guest and download. Thank you.